Good afternoon, everybody. Welcome to a video recap brought to you by the Trader Forum. I am going to briefly recap my Apple trade from yesterday. I know it's tough to see. Let me try to slide this over, but this is actually a visualization of Apple from my Apple chart from my software review service. Not my software review service, but a software or a trade review service that I use. But I just wanted to show you that is Apple. Here we have Apple on the daily chart. Here we have Apple on the 30-minute chart. And here we have Apple on the 1-minute chart, which actually shows my trade executions over here on the left side. So to start, I want to look over here at the daily chart. So as you can see, there's a lot of lines on my chart. I am a line-by-line trader. I use these lines as key levels, along with pivot points and price action namely, to determine where I want to take a trade. These blue dots right here that might be somewhat tough to see are weekly highs and lows that I just like to put on my daily chart. Because more often than not, these weekly highs and lows will show you where there's a long wick or a big move from a general direction and a little bit of a cleaner chart. So going back over here to Apple, as you could see, so this red candle right here is yesterday, Tuesday, March 1st. This green candle is from Monday. So the reason I focused on the area that I did was this 166, 166.50 level. As you can see here, after we bottomed at 154.70 several weeks ago and made a big push up and rejected this supply zone again, we came down, had a reversal day here on 2/14 where it made a bottom at 166.56. From there, we made a push back up, back into this supply zone, and then that's where we had the big failure down to 152. So instantly looking at this chart, I'm noticing that this 166.50 level was a key level where we tried to hold, where price tried to hold for a move back higher. As you can see here, it was broken on 218. We retested it on 222 for some more downside failure before moving back down into this demand zone at the 152 area and pushing back up. So the reason I was interested in shorting this 166.50 area is for one of the reasons I just mentioned, where this was last week's high of week. So last week's high of week was 166.69. So what that tells me is there's going to be a lot of traders that are looking for it to get to break out over last week's highs for a move upward. So that's a major area that I'm noticing. And as you can see, the last time we entered this area, we also sold off from it pretty well. But mainly, as I mentioned before, it's that pivot area where it tried to gain support and then push back up before it was rejected into the 170s. So I move over into the 1-minute chart, and as you can see here, this isn't the best cursor, I'm sorry about that, but as you can see, my first entry was a starter position at 165.50, and I believe, if I'm not mistaken, that was right at about the pre-market highs. So my thought process there is I'm going to short breakout buyers that are trying to long pre-market highs. So I scaled in 165.50, 165.75, 166, 166.25, and then eventually got to my full position size at 166.50, which was where I was originally looking to scale. As you can see, we immediately got some rejection off of the 166.50 level, where I again started taking profits down into where you could see we got some support here at 165.50 originally. So I took some profits into there, knowing that I could put on another, knowing that I take these profits here, I can put this position back on at my high entry, which is that 166.50 area, which is exactly what I did. I took profits. It retested 166.50 again. It sold off down to 165.55. On this wick right here, it actually hit 166.34, I believe. I had another bullet set up for 166.38 and 166.58, so it just missed my additional entries, but that's okay. It went ahead and sold off. I took profits at 164.98, thinking that we could potentially find some buying support at this 165 round number. Sure enough, we did. At this point, I had made enough money off of this original trade to be comfortable for the day, relax. I think my final fill was at 10.10, so 40 minutes of trading netted exactly what my daily goal, which is anywhere from 350 to 550. It got me where I wanted to be. Truthfully, I was a little bit shy of that, but for the first day of the month, I was very, very happy with the results of only trading 40 minutes. So one other thing I wanted to discuss is why we ended up getting a flush after this high of day break up here in this 166.50 area. And I am on the white screen if you all are struggling to follow along. So I believe at this point high of day was 166.51, and then as you can see we make a move off of 165, push up over 166.50, and then immediately get a downward move. The reason for that is if you are a short trader, more than likely you have your stops. Just one second, I'm going to pause for 1 second. You have your stops set above 166.50. So if the high of day is 166.51, more than likely people have a lot of stops at 166.51, 166.52, 53, 54, so on and so forth. So to stop out of a short position, you have to buy. On the other side of that, you have folks that are saying, okay, Apple rejected 166.50, but if we come back up here again and break 166.50, I'm going to buy this breakout. And I'm going to buy this new high of day for a move higher. So what that does is you have short sellers buying orders, you have long breakout buyers buying orders. So for smart big money, they're looking for liquidity that they can get into a fair-sized position for a substantial move. Well, the only way you can get into a fair-sized position when your accounts are as big as they are is you need the liquidity from dumb money, retail traders, breakout traders, so on and so forth. So when it comes up and it breaks 166.52, which would have been a new high of day, you're stopping out the short traders that have buy orders, and you're entering the long traders that have buy orders, which is a perfect opportunity for big money to sell into those buy orders, get a hefty position, and that's why you immediately get this move back down. So what ends up happening is, you get this stuff of 166.50, and then you get a move down, and it tries to hold 165 again. Market being weak as it was yesterday, you go ahead and you get the flush to end the day, and Apple actually eventually goes outside day. It breaks Monday's highs and Monday's lows. By then, as I mentioned, I had already made the money I was interested in making in the market. I was preserving mental capital, not having to worry about stress. At one point, I did think about putting a position back on here at 164.20 to short. As you can see, see if I can find it here real quick on this screen. Yep, it looks like it's showing up. So, as you can see, we had this big move down. Instantly, we're over 50% off the high, so I'm thinking, hey, this is a potential outside day here. The outside day would have been 162.43. So I'm thinking, okay, with this big move, we broke the highs earlier in the day. Now we can come down here and stop out these people that have their stops below the lows. That's what smart money does. They're looking for liquidity. They understand where people have stop, where people are stopping out. They understand where people are trying to break out. So you get this move down. Right here at about 164, you get a pop back up to 164.25 before you get failure back down here all the way to 163. So my initial thought was, okay, I'll start scaling in 164.20 up to 164.50. It ended up working out. I did not take this trade, however. I was purely just watching. As I mentioned, I had already made the money I was interested in making. Didn't feel like the added stress of trading in the afternoon session. But just something that I wanted you to notice is that you can see, after this big move, we tried to get support here at 164. You briefly had buyers step in, and then boom, they're gone. So once we come back up here and retest this zone again, that's where you get instant failure. Eventually, we break this 162.50, which they propped up for a while. Apple went outside day, and the rest is history. But other than that, I just wanted to go over my Apple trade, also go over some information as to why this failed instantly at the high of day. And again, it has more to do. You have to understand the big picture. If you just try to go ahead and short every high of daybreak, that's not going to work. You're going to get run over. You have to understand, based on this highlighted area, this 166.50 pivot level was a key support level when we tried to make a move back higher. And as you can see, as I mentioned earlier, we rejected it again here. My thesis was when we came back up here and retested this level that we were going to reject it again. Sure enough, we did. In and out of the market in 40 minutes, just the way I like to live. Stress-free trade, profitable trade, and hopefully provided a little insight as to why I shorted that area and as to why when we broke high of day we got another flush. So hopefully this video was informative for you. I'm going to continue making more videos and probably add in some live trading so that I can talk through my thought process and emotions as I'm live trading. I know when I first started trading, a lot of people do video recaps, but not a lot of people record their screen live where you can hear and listen to their raw emotion as they're trading. So that is my plan to do that. I actually I had a video that today I live recorded. It just unfortunately is way too long. So I've got to figure out the editing software before I can publish it. But if you like what you see, go ahead and subscribe to the channel. Give the video a like. Feel free to comment. I'm going to interact in the comments as much as I possibly can. Other than that, thank you very much for watching, and we'll see you again soon. Have a great day.